Hello traders and welcome to another video review. Today is Tuesday, June 17th, 2025. Let's take a look what do we have on the economic calendar for today. The major event during the Asian session was the Bank of Japan interest rate decision, and this time there were no surprises. Bank of Japan hold the interest rate at the level of 0.50% as expected. So we'll definitely take a look at the Japanese yen during the chart screening part of this review. At 10 o'clock we got IAA monthly report from the US. Then we are waiting for the economic sentiment and current conditions data, both from the Germany and from the Euro zone. There is a very nice expectation here for the Eurozone to increase the economic sentiment, improve the economic sentiment from 11.6 to 23.5. Well, let's see how this one will go. Data are scheduled for release at 11 a.m. At 2:30, there is a scheduled release of core retail sales data from the US, export price index, import price index, and the retail sales from Canada. We have a foreign securities purchases scheduled for release at the same time. And just a little bit later, at 3:15, we got the industrial production data scheduled for release from the US, and then at 4 o'clock we got business inventories and retail inventories excluding auto. Global daily trade price index from New Zealand is scheduled for release at 5 o'clock. At 7 o'clock we got data from the Atlanta Fed GDP now. 10:30 we got API weekly crude oil stock data, and at the 11 o'clock we got Westpac consumer sentiment data from the New Zealand. So without any further ado, let's take a look at charts. We start with euro dollar. The 4-hour chart of the euro dollar is showing us a nice bounce from the technical support at 1.1496 back up towards 1.1615, but because of this big upper shadow here, we got the movement to the downside, so slight pullback. So this supply zone is still active. This supply zone is still making a difference on the traders because the bears are getting active every time the market goes inside of this zone. This zone is located between 1.1632, 1.1576, so roughly around 60, let's say 60 pip zone. And if we break below the technical support 1.1494, then we can see that we can say that the top for the wave 5 is now in place, and we should expect a bigger decline to the downside because this wave 5 is the last one in the cycle. So it looks like this movement to the upside might be completed. The further confirmation comes with the breakout below this trend line here, the orange trend line, and obviously below the moving average, 100 periods moving average, located right now at 1.1420. Momentum is still strong. It's quite positive, 58 points. However, the bears are pressuring the markets by entering every time the market goes inside the supply zone, so please keep an eye on this. US dollar versus the Japanese yen. For our time frame chart shows no reaction for the Bank of Japan interest rate decision to hold the interest rate at the level of 0.5% as expected. Almost non-event, no volatility increasing event for the traders. We went a little bit higher towards 145.12, then we went back down towards the middle of this previous range. Right now 143.97 is the 100 periods moving average, and we are trading roughly in the middle of this local zone between 146.29 and of course the demand zone. Momentum 58 points, strong positive momentum. However, there is no breakout and no test of the nearest technical resistance located at 145.48, so we should wait a little bit for the more volatility to kicks in. The outlook remains sideways for the US dollar to the Japanese yen. Let me take a look now on the New Zealand dollar versus the American dollar. Where is it? New Zealand dollar, American dollar. There you go. Let's switch to daily a little bit. There you go. And the daily is showing us very interesting thing. I would like to point out there is this slight trend line that is apparently very nicely providing support as the market slowly but surely keeps grinding higher. Recent technical resistance and the swing high on this market is located at 6,075 pips. It was tested yesterday as well. So this is the red trend line, which means this is the technical resistance. And with this kind of a nice momentum, 60 points, we might see some kind of a movement to the upside if this level here, 6,075 points, 6,075 pips is violated, right? So please keep an eye on this situation. Last time we got the spike to the downside, we immediately recovered. We got this V-shaped reversal from the swing low at 5,481 pips, and now we're slowly bouncing up and up and up, making this like a stairways pattern. So only a breakout below the trend line support might be the first indication the top is in place. Otherwise, higher prices should be expected. Let's take a look at the SP 500 daily time frame chart. Is showing us that the market is above the level of 6,000 right now, and the movement from 4,802 points made at the beginning of the April is long gone. The local technical resistance and the swing high is 6,069 points. We will mark it as the technical resistance, but we can't forget about the situation with the last swing high and the technical resistance, obviously 6,147. The market conditions on a daily time frame chart are right now very good. Momentum is strong, 60 points, hovering around the level of 60 with occasional burst to the upside as the market keeps grinding its way higher. On the 4-hour time frame chart, we can clearly see that the 100 periods moving average is still providing the support for the markets as the market keeps moving higher. So please notice the situation when the market gets towards the 6,069 level for a test or for a breakout towards the swing high at 6,149. The outlook remains bullish on S&P 500. And last but not least, let's take a look at the Bitcoin. The Bitcoin moved higher towards the level of 108,855. This is where we have the technical resistance and fall down after the bearish engulfing pattern has been made on a 4-hour time frame chart. Right now we are very close again, very close to the level of 106,363, which is now the technical support. We can change the color for the green. There you go. So we got the technical support here. There is still the demand zone, which is our rectangle here. Of course, the green rectangle is still the demand zone, and obviously the upper zone here between this three horizontal red lines is still the technical resistance and the supply zone. So we need a decisive breakout to the upside in order to make another swing high, but the outlook still remains bullish. The trend is up in the short term, mid term, and the long term. However, this momentum right now at the level of 52 points doesn't actually allow the bulls to rally to the upside. We need some sort of the pause. We need some sort of the pullback, and then when the market is ready, we should go higher. Now let me just move this technical support, because I have noticed that the newest data are showing me that this is the level 106,174 is the technical support. As you can see, this level was tested once, second time breakout, it was tested 2 days ago. There was a slight bounce, and now the market is going towards this level to test it again. 100 periods moving average is 105,872. So this time any breakout below this level would likely get the best in control of this market and push it a little bit lower. However, this is still range trading. This is still sideways trend. In the background there is an uptrend, so there is nothing alarming going on the Bitcoin. We should see at least a sideways trend or the uptrend continuation in the during the next few days. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and Bye bye.